Hey folks, we all have busy lives. Seems like busier than ever for whatever reason these days, but not everybody has time to be in front of their screens watching for trades. I'm Vic Noble, and in this video, I'm going to show you how you can use price action, specifically advanced candle action trading, or ACAT as we call it, to swing trade the Forex. And by the way, in the text below this email, there's a link where you can get Darko's pre-market analysis video every Monday, absolutely free. And you see how he goes through his analysis in order to come up with trading opportunities using both advanced candle action trading as well as some intraday setups. And this kind of analysis applies to any style of trading, of course, from scalping, scalping, day trading, swing trading, or position trading. And today's video, we'll talk about swing trading. Okay, so let's have a look at ACAT swing trading. Okay, this is a chart of the Euro-Swiss pair. This is a weekly chart. Let me just zoom it out a little bit here. I want you to see something. I want you to notice the great level of support and resistance, and then it breaks through, it becomes support. It comes back and retests it. Like, when was this? This was back in 2017. Now we're in 2019. This is August, and look at all of this support. Let me just zoom it in again here. And when this happens, what we do is we start to look for clues in the candle action on these weekly candles. And specifically, this is our advanced candle action trading. And this pin bar reversal is one good clue. You can see how price came back down, retested this level, and took off again. I don't know if there was a signal in here or not. I want to focus on this one, but likely there was. And we use a 4-hour chart for our entry time frame on these swing trades, which makes things quite nice. I mean, it slows things down a lot, right? This bullish candle, okay, so after we hit here, we're going, okay, is this going to hold or not? Well, here's our clue. Did it ever hold? It went flying up like this. This is a pretty good move. We then go to our, so this, I want to just show you, this is the October 4th close, okay? So let's go have a look what happened on the week from October 4th to the end of the following week, which would be October the 11th. And we go to our 4-hour chart, which is our entry time frame. Here's the close of October 4th. That's what this black thicker line, vertical line is. And this is the end of that week on the thick line. Price comes down. Now, we could have bought right here. This is old resistance. Pretty good level of resistance, right? But why would you not want to buy here? Because your stop needs to go underneath here. Okay? You have to protect this. All of this price action here should be holding, but you don't want to be, you want to make sure you leave your stop in the right place, and this is something that we cover. But so you start to figure out the reward versus the risk. If you bought it up here, the buy-in here would be exactly the way that we do it, would be at 109.13 with a stop at below here, say at 108.20. So that would be a 93 pip risk. Okay. Now, this is a swing trade, so the pip risk is always going to be a bit more than if you're day trading and so on. But the target is up here. This is the opposing weekly level up here. Okay, this is a potential target for sure. But the problem is, if you buy it down here at 109.13 and you do get your target, that's only 137 pips. It's not even a 1.5 to 1 because you risked 93 pips to make 137. The other scenario is that you wait for price to come down further to your next logical place, and this level of support, or probably resistance and support, comes down to here again. And in this case, we're looking at a buy down here at 108.74, same pip risk, or probably the same stop loss price level, which is 108.20. Now you've only got a 54 pip risk, and the target is the same target up here, right? Now up at this 110.50 level, but now the target's 176 pips on a 54 pip risk. That's over 3 to 1 reward to risk. You see the difference? So that's how you figure out these swing trades. And for all your trading, you can figure out your reward to risk the same way for any style of trading that you're doing. So, and listen, it's possible that price only comes down to here and goes straight up. That definitely could happen. Okay, and so you just never get filled. So if that happens, we just move on. We can't force the market to do anything, and we just have to do, we have to wait for another setup. Listen, be picky. but also be sure that where you're buying makes logical sense from a reward to risk point of view. Well, I hope that was helpful. Do realize that with a longer term approach like swing trading, you're not going to get as many trades, right? And the ones that you do get, you need to leave them alone, and you just be very, very patient for your price levels where you'll remove risk from the trade, and of course for your profit targets to be hit. So if you need a longer term approach, maybe due to your job or other commitments, swing trading is something to consider. And even though Darko's PMA videos show day trading setups, our members are always free to ask us about any setups for any style of trading, from scalping on up to position trading. And as I said before, the analysis that Darko shows for day trading is identical for swing trading or any other style. Once again, if you'd like to get a free PMA each week, no sweat, we can do that. There's a link in the text below this video, so go for it. Thanks again for listening to these videos. I really hope you find them useful and helpful, and if you do, I'd sure appreciate it if you'd hit the like button, and be sure to follow us and click that little bell when you do, so that you'll be notified whenever we produce a new video. And leave a comment, ask me a question, or maybe give me some feedback with your thoughts on swing trading. I'd love to hear from you. Okay, that's it for now. I hope you all have a great weekend and trading week ahead. Take care.